Hello?
Hi,
Oh, just making sure I didn't hear anything.
I don't blame you for checking. Next thing you're like the only one in the room, like the Twilight Zone. What happened?
Others are here.
I know, just waiting for one or two persons from the in-class session to kick in, so we'll start in a few moments.
Okay, thank you.
Definitely. Maybe I can do my register. See who's here so far. Okay, Vincent. Vincent was here last week? I don't think so. Hmm. Spain called me, she won't be in today. Does anybody know which week today is? Yeah, week number 9. For those of you who are not sure, please make a note. Today is week number 9. So after today, we have another 4 weeks of classroom and lectures, etc. before your final examination. Remember, your final examination will not be cumulative. It'll be on the chapters we've covered, beginning with chapter 6. Okay, so just keep your focus on the chapters beginning chapter 6. Okay, Ashay,
Mr. Wilkinson,
hi.
is the exam still December the 5th?
Is that's 9? Is that 5 weeks from now?
No, I asked you the exam.
Yeah.
No, all of that? No. That's 5 weeks.
We have 5 weeks from today's, this is week number 9. 9 and 5 is 14. So 5 weeks from now would be which Monday?
That sound like the new year.
That's right.
Because this
You
goes,
say we have an eye exam on the 5th.
Well, is the 5th 5 weeks from now?
the 5th week is
No.
3 weeks,
That's more than 5 weeks.
more than 5 weeks. This November, right? This the ending of November.
Yeah.
So
We only have 2 weeks
No,
left.
this November the 14th. We only have like
so
2
what?
to 3 weeks.
Yeah, week number 5 is the 19th of December. That is when you will have your final exam. Final exam. Cameron, did you double check that?
Wow.
You guys check it? 5 weeks.
No, because you tell us our exam is December the 5th.
I know, but remember, a lot of things happen with Mondays. Remember?
No, ain't nothing happened since then. Nothing happened.
Then that date was not the correct date then. Because remember, our class is 14 weeks. So somebody must have given me the 5th, saying that that was the 14th week, despite the holiday and the holiday. Remember, we had 2 Mondays that we should have had class and we didn't, true? True?
Correct.
Yeah, but that date was given after the holidays. That date was given the same time as when you give us our midterm break date. You told us when the final date supposed to have been.
So we got the date wrong, because we have to do 13 weeks for your final exam. What I was thinking is, since I heard you with the dates after the blah, blah, blah. But what I was thinking in my mind is the 2 Mondays that we missed would have been 14 days plus blah, 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 which would give us actually the correct date, which is the 19th of December. That's really week number 14. I'm not sure how we arrived at the 5th. As a matter of fact, let me see if I wrote that down. The 5th. Does anybody have the 5th written down as our final exam day? Cameron? I don't see that date.
Mr. Wilkinson, the exam would cover chapter 6 to 10, you said, right?
6 to 10.
So we're on chapter 7 this tonight.
Yes.
So we only have 3 more chapters. We only have 3 more weeks.
Yes.
So that'll be next week, week after, and the week after. So that's the 19th just seems so far away.
Says who?
From my little quick calculation, so I could be wrong.
I know it's saying so far away, but believe you me, it's right around the corner. It's a month away.
Okay,
Yeah, just like
Okay.
that. And you will need all the time to prepare for your final in any event.
I agree.
Yeah. So, and the good thing about it is you get to write your final exam before Christmas. Because writing examinations after Christmas is weird. After having fun, then you have to write an exam. So that means you have to be studying in between. That's not good. So we want to get it done before Christmas, which is the 19th, so that when you're done, you're done. So final exam date then is finally December the 19th. That is week number 14. Which is the actual final weeks of the class. Let me just put that here. Okay, Ashay, are you there? Vinique.
Hi.
Hi, Vinique, you're there. You made it.
Yeah, so.
Very good, very good. Coming down the stretch is not easy. Cameron made it. Okay. Taisha. Victoria, I think you're there, yes?
Sorry.
Hi, good
I'm
night.
here.
Okay, Victoria. Yes, you are there.
Mr. Wilkinson, I tired, man.
I know,
I am
It's-
so tired with working home. I am
I
tired.
know. If you weren't tired, I would be shocked. Because, yeah, that means you must be a robot or something. Yeah,
Oh
no,
my God.
this stuff is not child's play. Learning is a big old headache. That's why only some people do it, and some people say, "What? To hell with it." It's not easy. Okay, academic work is not easy. Plus, if you have home stuff, work stuff, it makes it even more challenging. But no pain, no. Okay, trust me. When you said that a moment ago, I remembered in the old days when I was a student at COB, a night student, I would get up in the morning at 5 o'clock to get ready for work. In part as a young customs officer for a little while, a youngster like Cameron, 19, 20, hustle, bus or something to work, and then work all day with the egg at work. And then you leave work and you go to class at night from 6 o'clock to 10 o'clock, 4 nights a week. So I know, and I walked home because I didn't have a car and nobody to pick me up. No brothers, sisters, mommy, daddy, none of that stuff. Just walk home. And then when I got home, ate whatever was available to eat, and then drink some coffee and sit down to do homework projects paper every night, just to keep up with all the classes. So my average sleep time for a couple of years was 2 hours a night. So I know exactly what you mean. Trust me on that one. It stinks. But guess what? Hang in there. Hi, come right in. Vincent, yes. Okay, Vincent is back on board. Hold on it. Let me change that to Taisha. No, Victoria. Yes. I know I saw Victoria a minute ago.
Hi,
Crystal,
Mr.
yes.
Wilkinson.
Yes. Just checking. Some people show up and then after that, they run off into the sunlight.
No, I still here.
Good. Just checking. All right. Crystal. Not there yet. Which Neek is? Teranique. The Neeks. Ivania.
Hi.
There you are, Ivania. Great. You're here. Okay. Felony. Yes. Got that right tonight. Felony. Man, the other Neek. You have to go back? Oh, I thought you said to go back to the car. All right. Shadell.
Yes, I'm here.
Okay, there you are. Fantastic. Is there anybody's name I didn't call? Okay,
And this Shanique, I'm here.
Shanique, okay, excellent, excellent. Thank you, Shanique. So, did I promise you your grades the last time? Yeah, I know.
Yes, you sure did.
Don't call the cops yet. Somebody said earlier, I'm so tired, I don't know what to do with myself. So if she's tired, I guess I wouldn't complain. I'll just leave it there. I'm almost done though. And hopefully in another day or so, I can get your grades, your midterm grades to you. A lot of people did fairly well, and then others did something. But that's only one examination. You still have your final exam and all the other stuff to go with it to make up your overall grade. So please, like I tell students all the time, if you don't get quite the grade you want for your midterm exam, that's not the time to panic, leave, or jump ship. That's the time to buckle down, read and study some more, and just get right into it until the semester is over. Remember, it's never over until the fat lady sings, okay? Because you never know what a lecturer might do, or how the lecturer might grade, or how you might surprise yourself in the final and so on. So do not, just because you didn't get that 100% for midterm, don't even think about giving up. That's not the solution. Okay? Yes.
How I was in, I spoke to this day and she told me that it's Saturday coming and that they will be coming, right?
No. Just make arrangements with them.
Yeah, she told me that's going on Friday. I was upset.
Oh, that's what happened. Oh my God, you're lucky. Pneumonia is tough. Fantastic, because that could have been another story, Vincent, for sure. Now, Ms. Dean is on holiday, but you can call anyone here, Miguel or Ms. Johnson or one of anybody here.
I spoke with her last week,
Who?
this day.
Yeah, she won't be here this, did she say she was gonna be here this week?
No, she only told me just call and they'll make an arrangement for me Saturday to come and sit there.
Okay, what time did you agree?
To do Saturday.
What time did you agree to do it?
She got me calling on Friday.
Right.
So they can give me a specific time.
Good evening. Good morning.
So
Yeah,
I mean, whenever, I'm free Saturday, so whatever.
yeah, call on Friday, set your time. Okay, definitely. And make sure you come in and do it. Which means that this week you're going to be very busy coming out of that bloody, thing you had. Plus. So,
And I know I have a lot to catch up on.
yeah, life stinks, which means that this. So,
So was that last?
yeah. But you still have to prepare for your exam. Yeah, you still have to prepare for your exam. Well, you can't open the book if you're not well. That doesn't work. Okay, so yeah. Is anybody in here who can give you an update, or do I need to send the information to you?
I would like it to tell me.
Okay,
The only person I know. She can't stop.
okay. Crystal,
Yeah.
okay. Crystal,
I was in his office. We were up. Finally got with it.
yeah, Felony knows exactly why she said it was okay.
He did well.
Well, I can't give any trade secrets, but I have a feeling that the way she answered, she knew exactly why she said, that was okay. Doggone it. Yeah, okay, so Vincent, you have to read chapter 6, which is what we did, chapter 5, which is what we did 6,
No, but
which is what we did after the midterm.
Chapter 5 was the percentage.
Yeah, chapter 5 is part of the midterm exam. So for midterm, you have to study chapters 1 through 5. All right, once you've done that and finish your exam on Saturday, your weekend, cancel it. Because now you have to read chapters what? 6 and, which we'll do tonight to catch up. Okay, I will then send you the homework for chapter 6 and you'll get the homework for chapter 7 tonight.
I have my homework to print it out for chapter 5.
You have it?
Right, that's what I was looking for. When you guys said I might have leave it in the car. I don't know if I brought it.
Make sure,
But if not, I'll just photocopy it because I back to work and send it to you in the morning
you mean my email?
by email.
Okay,
Okay.
okay, that's fine.
But I won't lie, chapter 5 with the percentage, I'm so lost. I wouldn't even lie.
That, really?
I was so lost.
What the hell, percentages?
I was
That's
so
like grade
lost.
6, grade 7. Were you guys,
Not with
you
that.
skip class or something?
I wouldn't lie, I was so lost. No, I know that wrong, but I just do something to do it.
Felony. Why you got stuck on the percentages? What you got with what? Oh, that's an old problem.
I think I missed that week. So I had to read it on my own.
So we're talking specifically about what, ratios?
I think the first question was rounding the percentage, and the amount of the certain percentage. And I.
Man, that was supposed to at least.
And the formula.
Oh, yeah, see now, she made a key statement. Did everybody hear her? She didn't have enough time. See, students often make the mistake of leaving things for what? The last minute. And nothing, unless you have that kind of brain that can sop stuff up, and only a few people can do that. It's called cramming. Unless you have the ability to cram, you should always start early. Otherwise, it'll always end in some form of frustration, no matter what reason or excuse we give. Okay, always start early, because otherwise you may not have enough. And that stings, doesn't it? When you're running out of time and you know you're not gonna have the time to learn it in time. Not that you don't have the ability to learn it, you just don't have any more time. See? It stinks. For sure.
December 9th is the final exam, yeah?
Yes,
Nineteenth.
for those of you who missed it, the final exam date is December the 19th.
This class and on the 5th? No?
No. No, if it, somebody else said the 5th, but if it was the 5th, that would not be 14 weeks. I don't know how we ended up at the 5th. Saw some weird, something happened.
I think that's a bit of a national. Yeah, it has.
Oh, that's why. Yeah, that was wrong then. Because that's what I was telling the student online. I don't recall my establishing it as the 5th. All right, I didn't even have it written down. Normally I would write it down. Okay, so if Biff has it as the 5th, maybe it's because Biff didn't plan for those 2 Mondays that we missed. Yes, yes, absolutely. Okay, so please make a note of that. December the 19th is your final exam date. Now, Crystal, is this magic ink? I'm just teasing. Magic ink. This is,
I have to write essential because every time I go back and check, I see mistake and then
Oh.
sloppy work.
oh no, I know what you mean. Here's how you correct mistakes without having to blah, blah, blah. There are 2 ways to do it. Let's just put this here, mistake. Some people, students, correct their mistakes like this. See one of them. Then it looks what? Messy. Mistake again, mistake. See, watch this, straight edge, 1 line.
I hate that too.
You hate that
I
too?
hate that
So
too.
you are a woman of perfection.
No, I
Oh.
don't know. I mean, when it comes to work and presentation.
I get it completely. No, there's nothing perfectionist in everything. But when you're laying out stuff, you like it to look neat. Nothing wrong with that. Absolutely not. All right. So, homework. Did anybody get stuck anywhere in chapter 6? Homework? It's a good time to start before we get into 7. Anybody got stuck in the room or online with the homework, or when you went back to check everything and kind of worked out eventually?
That's the head thing. It's pretty well.
What was the hint?
To the tri-level thing.
Oh, the tri-level thing. Yeah. So you just went back there and said, oh, yeah. Okay.
One or two still was there. It still was a lot, and one or two still wasn't.
Crystal, she's not satisfied with the 90. She's busy with the 10%. 1 or 2 didn't work. I know.
Mr. Wilkinson,
Hi.
when I got that clue from you, I was able to do it. Thank you.
The
This is
thing.
Victoria.
Yeah, it made life a whole lot easier. Yeah.
Yes, yes, it did.
It's amazing how a simple twist can change an entire program. The difference between success and failure. For sure. All right. So there weren't any pressing questions about the homework in chapter 6. That's good. Yes. Mhm.
Periodic.
I love it when you use the language, periodic. Yes. No, I love it. That's what I want you to do.
I noticed the difference wasn't a big difference, but they asked us on page 243. And now use the same information from 242 and turn into the periodic inventory system. I know it's not a big change, right?
Right?
So I was looking at it, I was like, this don't even make no sense to win. I did it, but I just saying, I feel like I was doing the same thing, right?
You were, to an extent.
It was only a small little change.
Interesting point. Because now, remember, you have to do entries for using the what system?
Perpetual
And
periodic.
periodic. They are very similar for majority of the what? Journal entries, correct? Except for 1 or 2 instances. Did anybody figure that out?
And I think you have to add in the word purchase. It's almost like you classify them in a way.
Which one do you use the word purchases for?
Periodic.
So periodic then, if you buy goods for $5,000 for cash, you, under the periodic system, you debit what? Purchases for 5,000 and credit cash for 5,000. Under the perpetual system, perpetual system, what would you do? What entry would you make? Instead of debiting purchases, we debit merchandise inventory. See that? So eventually you came back right in time, yeah. For 5,000 on credit. If it's on credit, what about it? Yeah. Let me just make this point, folks, because it's important to know. When do we use accounts payable in accounting? When do we use that account? When you purchase on credit, okay? So if we assume a credit purchase here, then instead of crediting cash, we will credit accounts payable. Now, whether you guys realize it or not, whether you've given yourself credit or not, all the work you've done has put you ahead. See, 7 weeks ago, you didn't know anything about this crap. If somebody put this before you, being like, man, it's amazing what can happen in 7 weeks of learning when you apply yourself and sweat a little bit. Now you have a far greater understanding of the language of accounting. And some of you will never imagine where even this little bit of information that you've gotten so far will take you in the future. You cannot imagine. Professionally and or personally. Because remember, now, whether you realize it or not, you can go home and prepare your own income statement, can you not? See? Which you may not even have thought about or understood before. So at the end of November, you can say, let me see what my revenue is. See that? Revenue from salary, revenue from money from my husband who just give it to me, no reason. What is revenue for you? Revenue from, give me some more revenue you can make personally during the month. That's an expense, hell no. Revenue. Revenue is money coming in.
Yeah, I know, I thought it was listing expenses.
Oh, not yet. So far, we're listing your revenue for November. Salary from work, money from husband. Notice I didn't say money from wife, Cameron.
And ASU.
ASU, yeah. You may have gotten your ASU draw. That's income. ASU. If you collect rent, of course. Not pay, collect. If you collect rent, that's rental income. So all of a sudden now, your revenue for November is whatever that adds up to be. It's $5,000, man. That's sick. But of course, the old gray-haired monster is there. And we can't look at the net result until we've taken out what? All expenses. Not some, all. And so for some people, the expenses total $4,900. So how much they have left? The savings, etc. $100. Some people, expenses are $6,000, more than they make. So now that's when you have to take from Peter to pay, or borrow from Tingham and Tingham them to cover the what? $1,000 shortfall. And no matter how seriously you may not be taking it this semester because you're tired, at some point in the future, this stuff is going to come back in your mind and you're going to be tempted to write it down, which you should, and see how you're performing personally on a monthly basis. Simple as that. You never know which job you're gonna get into, where your knowledge of preparing an income statement for your boss might get you a salary increase. See my point? May not see it now, it's mine. I don't see it. I know you don't see it. I didn't see other things either. Okay. I didn't see my two sons not living here in Nassau. As far as I was concerned, when they finish college, they're coming back home to work and do, yeah. But now they're gone to hell somewhere. Didn't see that either.
Oh. It might sound stupid.
No such thing in my class.
Sound stupid.
No such thing in my class.
I know. My sister,
Mhm,
she worked for Central.
mhm.
And with the whole percentage thing, I was asking, you know, to help me out. with it
Right.
Yesterday,
Yes.
she was like, oh, we don't really use this no more, everything computerized, so I only just put this in and the computer can work. So, my question is, it's good to know the basics, but if everything is computerized, where does this come in?
Well, first of all, you have to understand what you're putting in. She can tell you that because she knows what to put in. Because she knows it already. If you don't learn it, you won't know what to put in. Then, because you don't know what to put in, garbage in means garbage out. You'll put in garbage and garbage will come out, incorrect information. And finally, even if the correct thing is put in by someone, whatever comes out, if you don't understand the basics, you won't be able to interpret or understand what the result is. That's why we go through this. See, remember, computers can only do what we tell it to do. It is only as effective as the information we put in. They are not smarter than we are. They are a bunch of dumb, rusty pieces of metal that are just there to help us what? Do things faster and on a more consistent basis. That's all.
No, that's what they just said it is. When I tell her, I say, look, when you look at this and try to explain it to me, she said, no, I don't have to do that no more. The computer-
Yeah, and maybe she didn't remember anymore either, because she's so used to what? Putting it in, but she didn't want to tell you, I forget. Because some people are so used to putting stuff in the computer, they forget the process. Just like some people are so used to using a calculator, you say 1 + 1, they say, where's my calculator? They forget to think even. You calculate 2. Yeah, absolutely.
I mean, but like, how she come out here, it's like, what you trying to do ain't even relevant no more, you know what I mean?
It is relevant.
This is how.
It is relevant, okay? It may not be relevant for her who can put in the computer and punch it out, but that little child in grade 1, 2, 3, 4, 5, 6 has to learn it. Because if they don't learn it, they wouldn't know what to put in the computer. She has already learned it. And did it a what? 1,000 million zillion, see my point? But don't let the folks tell you it's not relevant. It definitely is. And always will be. Can a computer be a better lecturer than a human being? Never. Can a computer be a better student than a human student? Never. They can be programmed to do certain things faster, quicker, and so on. But at the end of the day,
I mentioned it because I was bugged the hell out of me how she approached me.
I know it did.
I bugged the hell out of her.
What she said and how she said
How
it.
she said, right.
And I wasn't there. I can still tell you how she said it.
Yeah.
You ever wondered why? It's a long story. I've been around a long time already. I don't know how the hell that happened. I remember I was like, this dude. That was like 5 minutes ago. Big old afro. Like this. I'm not kidding. I know it's hard to imagine. All right. My son. Yes.
Question for you, hold on. You said, the time you use accounts payable is when you put something on credit, right?
When you purchase something on credit.
I noticed that in the book,
I love this here in the book. That means you're in it.
but I think you mentioned in class last week,
Okay,
we said anytime a customer returns merchandise,
yes.
we record it as accounts payable, right?
Oh, uh-huh.
I was trying to think about the logic of it.
Of
I'm
it.
trying to explain it. I was like, you know, you're gonna have that on the exam.
Somewhere, yeah. Well, let's use this one. Somebody put, let's say, in your example, they return something, that means you sold them something.
Mhm.
So let's say you sold a customer, what did you sell? Merchandise?
Mhm.
Okay. So let's say you make a sale for $3,000. I'm just trying to think of a case where we can use accounts payable. Let's use this example here, so we don't confuse the issue. Where you purchase some goods on credit, so we keep it consistent, okay? You debit merchandise inventory, credit accounts payable. Now, what, this credit to accounts payable is a what? Asset, liability, or equity? Liability. So we have a liability account called accounts payable with a credit balance in it. What in accounting, as far as you know now, would reduce that balance? Yeah, and what kind of debit would have to occur to reduce that balance? A payment. So somebody comes in with a payment and pays $3,000 on the account. What would be your journal entry? They paid $3,000 on the account in cash.
Yeah, credit cash, debit,
Say it again?
debit, cash, where you debit cash, and then you credit revenue.
What happened here? You say someone paid 3,000?
Not someone, you, sorry, you. Because you purchased the merchandise. So you're paying now $300, $3,000 on your account.
Debit, accounts payable,
So we debit accounts payable,
and you credit cash.
for how much?
3,000.
Yeah, and we credit cash. 3,000. And so this 3,000 would then be posted here as a debit. Do you owe any money still? How much?
2,000.
And there you have it. So even though we use accounts payable to show transactions on credit, once you start making payments on the account, then you have to show those payments in the account until it gets to what? 0. So every time you make a payment, you debit accounts payable, credit cash. What entry would you have to make, Crystal, to pay off your balance now? What journal entry would you have to make to pay off your balance?
Accounts payable, 2,000.
Is she finished, anyone? What did she miss?
Credit, yeah, sorry, I debit cash,
Debit cash means cash is coming in. You're paying off the balance.
accounts payable, 2,000. Credit,
Should she credit accounts payable?
No, debit.
Remember, you only credit accounts payable when you're purchasing something on credit. In this case, you're not purchasing on credit, you are paying off the balance. So now you're giving money out to whomever you owe the money to.
so accounts payable, debit,
Okay, so we debit accounts payable for how much?
2,000.
2,000, right? And
Assuming,
yeah, that's funny. You're paying off your account.
mhm,
You don't want to owe anybody. You're paying off your balance.
mhm.
So what do we credit?
Yeah.
Is that a statement or a question?
Statement,
Okay, way to go. Credit cash. Why do we credit cash, Crystal? Let's see if Crystal has put it to memory yet. Why do we credit cash?
Because my dad would urge me to be the same.
That's true. I wouldn't knock you for that.
For your
It
parents.
would be like hell for me to say that's not true. That is freaking true. That's, way to go, Chris. I like that. So when all that's go the one you know, yes. Anybody else can remember why we credit cash? Because you are paying money out. Remember the rule for cash? Whenever cash is a what kind of account? Asset, liability, or equity? Asset. For assets, remember the rules? You have to learn them. That's the thing.
Yes, it's coming in.
Yeah,
It's debit.
assets coming in is always a what?
Debit.
Debit. Assets, cash going out is always a,
Credit.
that's all, that's the only reason. Debits increase cash, it's called this cash. Debits increase cash, credits decrease cash. Debits increase any asset, and credits do what to any asset? What do credits do to asset accounts? Decrease them. That's it. And once you learn those rules, what do credits do to liability accounts? Yeah, he's learned that crap already. What do debits do to liability accounts?
Decrease that.
Decrease it, yes. What do debits do to equity accounts? Hell no.
Decrease.
Decrease. Yes. What increases an equity account? Debit or credit? Credit. See, it's an amazing thing. 3 weeks ago, somebody asked you, I'd be like, dude, I don't have time. But now it's part of your DNA. When Cameron gets that next job in the bank, and they say, Cameron, at the end of the day, make sure you debit these and credit that. He said, "Mother said, I'm so happy I didn't shop that class." And I was thinking, Mr. Wilkinson only said I'd keep me that stinking class. Now, all of a sudden, he's a master of how debits and credits work. And somewhere in his not too distant future, the same crap is going to be of great benefit to him and some of you. Somewhere. That's why I told you, if the Institute is offering part 2 next semester, suffer it, bite the bullet and do it. If your company don't pay, you pay. Do everything to get the money except TIEF. How do you spell TIEF? TIEF. But do it.
You would be doing part 2?
I believe so. By hook or by crook.
So you see the same people in the crowd, that's the last
10 points.
10 points off.
I think you need to go and join the remaining politicians of this generation. Because they all gonna die off eventually. We're gonna have a new breed. All right. Okay, so if you guys are comfortable with that, we can move on to chapter 7. Now, chapter 7 is all about what we call inventory accounting. Is there anybody in this class who's bold enough to admit that they didn't read chapter 7? One, fella need to, everybody.
I am.
I didn't finish.
How, you read some of it? If you read some, you are way ahead of the rest of your colleagues. No, I get it. Reading stinks unless you love it. Like anything else, unless you love it, it stinks. Especially when you're tired of other things to do. People are pressing you. Everything's going the wrong way. Then you have to sit down and read. Okay? But it's a necessary evil that we're all stuck with. So, chapter 7 is about inventory accounting. Chapter 7 is about establishing that when we come to valuing inventory in accounting, we say we value it at the lower of cost or market. Whichever is lower. I will see what that means shortly. And then we are confronted with our old enemy again, periodic and perpetual. They're back. this time in the form of inventory valuation. So we're valuing inventory under the periodic system now, and we're valuing inventories under the perpetual system. So once you're comfortable with that so far, then we can talk about the 4 methods that we use to value inventory. 4 methods. Anybody knows what those methods are yet?
Specific ID,
Yeah, specific identification or ID,
average cost method,
average costing method, and
first in, first out,
first in, first out, known as FIFO, and
last in, first out.
last in, first out, known as LIFO. They're the enemy for tonight. And for a little while, they will seem like an enemy you cannot overcome. But like what you do with any enemy, you keep attacking it until finally you get it to the ground. So we're gonna see how well you wrestle this enemy to the ground. Okay. Cameron, why don't you open up the reading for us tonight? Because sometimes one of the reasons why I have students read is so that we can all listen to each other, because things tend to stick in a certain kind of way. And somebody's reading something, the other, including the reader. The other reason I like to do it is because a lot of students don't get to reading stuff. Sometimes the whole exam rolls around, they're not going to reading everything. They just try and pick through it, and we pick through this. So, yeah, at the top. Okay, and then of course, in reading, we have a whole lot of little things going on that we don't really see if we don't read it. Okay, it's like reading people, like you go on a date and people think you're just eating, but a lot of people are not just eating, they're reading. Anybody ever did? Sorry? You mean on the date? Oh, oh. Krista, that's cute. Can you define a shy reader, Krista? Like, who's a shy reader? What kind of characteristics would that person have?
Like introverts, quiet people who like to stay themselves, who just do not, do that public speaking, who just nervous.
Yeah,
I'm on Zoom too. I just mean, I mean, just,
you mean in the classroom?
yeah.
Okay. Well, if I ask you to read and you're shy reader, you can do like this. I'm too shy to read. Or you can doggone do what? Yeah, step on and say, this on that. I am shy, but I'm gonna give it a shot. How's that? Yes. Would you guys believe that long time ago, see your word, Crystal, I was an introvert. I know it's hard to believe, introvert. And even harder to believe is that I am still one, but not when I'm lecturing. And not when I have to make a point. And not when somebody tries to get me to do something I don't want to flicking do. See, like that. And then after it's over, I go back to being a what? Shell. That's a shell. Until, I know.
I think they call that ambivert, half introvert, half extrovert.
Yeah, that's, didn't think of that one, but yeah.
Never. I don't believe that.
I know. Neither did my children. They're like, man, Dad, are you kidding me? As much as you doggone like this over us when we were growing up. I'm like, I only did that because I came out my shell to make sure that you had the right things that you needed to know. Now that you're men, I can go back in my shell in that area and just give you my opinion. If you don't take it, dog eat your lunch. Because I can't make you do anything anymore. See, it's kind of like that. All right, Cameron, let it rip. If you're a shy person, just let it rip, like, oh, I'm reading it anyway. I don't like it, too bad. How's that? Cameron? Christus. That's not quite what I had in mind.
The value assigned to the ending inventory is a result of two measurements, quantity and cost.
Quantity and cost, please keep them in mind. These are the two elements that you need to get to the final valuation. Quantity, how much? How many? Cost, how much?
Where
Please,
is he reading from? Where is he reading from?
what are you reading from, Cameron?
Page 268.
268?
268.
Oh, no, not 268.
264.
Well, we're in chapter 7. Yeah, 264 at the top.
I was one, okay. Sure, okay, yes.
Yeah, page 264. All right, let's go, Cameron. Concepts underlying inventory accounting.
For any company that makes or sells merchandise, inventory is an extremely important asset. Managing this
Extremely
asset.
important one.
asset
Okay, see, that's the thing about reading. There are two ways to read, like read it and something totally oblivious, and then read it like, oh, inventory is an asset. That's important in accounting, isn't it? Because it's important to know that it's not a what? Liability or equity, revenue or expense. It's an asset. Now, let's be bold. Why is inventory an asset? Like, thank you. See? Don't mind, Crystal. It's but so I'm so confused over here. Maybe over here, but she has some other crap down pat. Make no mistake about that. And when the time comes, she's gonna argue with somebody. Excuse me, that's an asset. And then she leaves the room. Crystal, how you know? Don't worry. I know. Okay, that's the beauty of it. Cameron, keep going.
Managing this asset requires not only protecting goods from theft or loss, but also ensuring that operations are highly effective, efficient. Furthermore, as you will see in the chapter, proper accounting for inventory is essential because misstatements will affect net income in at least 2 years. Inventory is considered a current asset because a company normally sells it within a year or within an operating cycle.
See that? So current assets, see you learning, even if you didn't remember or know before, these little things coming up just in the reading, which for the most part, some of us went, man, I could pass that. But now you know an asset is considered current because it is used up within a year, which means that if it's not used up in a year, then it is long-term asset. And anybody remembers the classified balance sheet? On the asset side, the two main classifications are current and non-current. Wow, keep going.
A merchandising company like CVS or Walgreens, inventory consists of all goods in it and held for sale in a regular course of business. Because manufacturing companies like Toyota are engaged in making products, they have three kinds of inventory: raw material, goods used in making products, work in process, partially completed products, finished goods ready for sale. In a note to its financial statements, Toyota showed the following breakdown in its inventories. The work in process and the finished good inventories have three cost components. Cost of the raw material that goes into the product, cost of labor used to convert the raw material to finished goods, overhead cost that supports the production process. Overhead cost includes the cost of indirect materials, such as packing materials, indirect labor, such as salaries of supervisors, factory rent, depreciation of plant assets, utilities, and expenses.
And again, the reason why they're here is because these terms are going to show up again later somewhere. Okay, indirect overhead, indirect cost. Let's just stop for a moment before he goes on. Why do you think we call the supervisor's salary indirect labor? And who would be considered the direct laborers in a manufacturing company? Well, the supervisor goes to work too. But the direct labor would be those persons who are actually making and doing the thing that's being produced. Yes, the line workers. The supervisors are indirect labor because they're not on the line, but they're there to watch the line. Okay, and that is the difference between direct labor and indirect labor. Okay. Trust me, given the nature of accounting, you're likely to see those terms again. Okay, keep going.
The primary objective of inventory accounting is to apply accrual accounting to the determination of cost of inventory sales during an accounting period. Valuation of inventories is usually at cost. Inventory cost includes the following: invoice price, less purchasing discounts, freight in, including insurance and transit, applicable taxes, and tariff.
Has anybody gathered anything from that little piece? The actual cost includes all kinds of different things. See that? Not only the invoice price, what else does it include? The freight that you pay to get it in, anything else? Taxes to the government, anything else noted there? Insurance. In other words, folks, whenever you buy an asset, in this case, inventory, could be a car or anything, whatever you pay to get it into your environment or put it to use, all of those costs and charges need to be added on. So you can come up with a what? Final cost of the asset. In this case, inventory. Right, so these little things about adding these little bits and pieces, and they are very important. If you don't do that, you will find yourself losing money because you're paying money to get things to you like inventory. But if you don't include all the costs, when you sell that inventory, it will not include what? All of your costs. By all means. In fact, some people, for example, if they go to Miami to buy a car, here's what they do. In Bahamians, because Bahamians have figured it out for the most part. Here's what we do. What's this? Same thing with inventory, but let's use the car. They go to Miami, go to an auction and buy the car for, give me a price. At the auction.
4,000.
Okay, a little couple thing. Okay. 4,000. Crystal, make it interesting.
What?
The cost of the car at the auction. 4,000 is a little too.
Okay, let's say 8,900.
Okay, 8,900, way to go. So the invoice price then from that you should get from the auctioneer, invoice should state 8,900. Now, when you come to Nassau, would you sell it for 8,900? No, because the car has to be moved from the auctioneer to the dock, correct? So that's transportation there. Give me a number, Crystal. This is your car.
3,000.
Not that much. Just to move it,
Oh,
couple $100. How much? 200. Okay. From the auctioneer to the dock. So now the cost of the car is no longer 8,900. It's now 9,100. Then you have to ship it on the Betty K to Nassau. So shipping 1,500. This is getting interesting. So now what's the cost of your car, Crystal?
10,600.
10,600. See that? Or from here. Original cost. Then you have to pay insurance on the Betty K in case the Betty K sinks and your car goes down with it. Insurance. 500. No. Yeah. It wouldn't be more. No, it's only a couple $100 to insure it. And the reason why it's only that, because there are other persons who are getting insurance. The more people in an insurance, the cheaper it will be. Okay. All right, so now what's the cost of your car? $11,100. Down up from 8,900. Now watch this. when the car gets to Nassau, the customs officers are waiting. You have to fill in a customs form and pay customs duty. And customs duty is a minimum of 50%, minimum. Okay. So duty, okay, let's use the minimum just to be nice. 50% of 11,100 is how much?
Oh, wouldn't it be 50% of the cost you pay for it? Or
No, 50% of the landed
the
cost.
landing cost? Okay.
Of course.
I thought it's the actual price.
No, custom, you have to add all these in, customs and charge duty on the overall
Everything.
cost of the car.
Okay.
Because remember, once it gets to Nassau, this is no longer the cost of the car. This is the cost. So customs will not be shortchanged by this will bring them more money. So what's 50% of, I see you on the calculator. That's good, because you need a calculator for this class. 5,550. Now what's the cost of the car? Kiss my foot. 15,000, how much? 16,000 even? 16,
Yeah.
650.
Their prices on that. Yeah, but
Well,
modified.
here's what duty and all that stuff does to stuff, okay? But 10%. How much is 10% of that? But 10%. 1,665. Now what's the cost of the car? Twice the amount you paid. 18 how much? 315.
You can't blame the seller now.
No,
You can't blame the seller.
the buyer will still try and blame you, but it doesn't matter. If the buyer wants to get a better deal, they'll have to go themselves. And if they pay 8, 9, they'll still pay what?
Yeah.
Well, not still pay, because they'll end up paying this. With you, they can't pay this, they have to pay what? More, because you need to make up. Exactly. And depending on what the person's profit is and how bad the person wants it, that will determine the final what? Selling price. So Vincent will say, I want a $5,000 profit because I'm greedy.
5,000.
So now the cost of the car is what? 23,315. And so all you have to do is find somebody who wants that car dead bad,
Nobody.
dead bad.
And the car might need to fix.
Well, that's a whole other problem.
No, you paying that type of money, you know.
No, it could be a lemon,
Yeah.
of course. Man,
Water damage.
people have gone to car dealerships and bought new cars and discovered they've bought a lemon. The car stopped working 2 weeks later. Stop in the middle of the road, starts it, and they keep trying to fix it, can't fix it. They have to either dock the person or give them a new car.
Water damage.
Of course,
Cars on the go.
could be a lot of things, could be a broken check. You don't know, that's why you have somebody what? Check out the car before you
Exactly.
buy it. Okay, but in any event, we're looking at inventory, the costing of an asset. And the same thing happens with inventory. Some of the issues will be different, but whatever the cost involved in getting inventory to your store, all of that has to be added in order to come up with your final cost. That's the point we're making in accounting. Okay,
But, what I do say, they really, usually when people bring car in, they put on the price they actually paid for the car. So that would actually be the 8,900 they would add.
to what?
To the, after you would pay everything, which would be the 1750, they would add that same 8,000.
They could do that. They shouldn't, but they could.
That's what they usually do.
Yeah, I know, because it's like this. It's like somebody goes to New York, who has a clothing store, and go to the factory and pay $2 for a blouse. And then they come here and sell it for $30.
$30.
rather than 10. But the greed wouldn't allow them to sell it for a reasonable profit. Okay? Because people come and say, this is nice blouse like this. This look good on me, my small waist or whatever it is. People. And so they're prepared to pay whatever price they're given because they love it. They say, I love it. So they don't stop to think that maybe it's not really worth that much. It's the same thing. So the marketplace is a strange thing. Okay, a strange thing. Different things are presented depending on what's being marketed. Okay, for sure. All right. Notice, interestingly enough, speaking about what's being presented, let's talk about the oldest profession in the world for a moment, which is what, Cameron? I'm picking on him because he's the youngest in the class. He's gonna try and figure it out because he hasn't really heard it yet. And he never thought he would hear this in an accounting class. But he's going to hear it anyway. Okay, make a guess. Teaching? That's a good guess, but that's not it. Anybody knows what the oldest profession in the world is? What is swinging? Oh, you mean trying to outsmart people? No, that's a good guess too, but that's not the oldest one, according to the old saying.
I think,
He'll never get it.
a manager of anything, like a boss, like a
That's-
ruler,
That's a good guess, because that's been around a long time. People being in charge of stuff.
slavery.
Yeah, being in charge of stuff. But that's not it. Felony. Online people, the oldest profession in the world. Okay, let me take care of your misery, beginning with Cameron. Ready, Cameron? No answer. He says, should I give an answer? Prostitution.
Yeah, I just Googled it.
Oh, you did? Okay. Yes, it is. Is it really the oldest? That could be debated, but the real point is, it's dead old.
That was a way of life back there, right?
It's a way of life now, not no back
I
then.
know when I say back then, that was an actual job. like-
It's an actual job now. Vincent,
You get what I'm trying to say.
Do you get what I'm trying to say?
It was respectable back then.
respectable?
Yeah.
Never.
Yeah, it was worse, it was more.
No. Back then, it was expected. because
No.
women didn't have the
No,
privilege
no,
they
no.
got now.
No,
Women did not have the privilege. they
no,
got
it
now.
had nothing to do with privilege. It's what is right and what is wrong. Has nothing to do with privilege. In fact, a prostitute then was seen as 10 times worse than a prostitute now.
Not from what I,
And they were
I-
more open back then.
not from what I, right, it was more open, like.
Open?
From what
No, I
read.
mean, like they.
No, it was not.
hide that.
It wasn't
Like
hiding.
now,
It was
people try
up on-
hide it.
it
No,
was
you
up on-
women back then were not open. They didn't walk half naked like this. I'll do it for whatever. No, no, they were in a room.
Alright. I mean, you don't live it, but from what I read, like back then, it's like you could go to bar and they just lingering around in the bars as soon as you. come
Oh,
in.
no.
And
Yeah,
then
now.
they used to hide that.
They used to
though.
hide it. You can't do it now. They don't, they hide it now. You don't see that now.
Yeah, that's what I'm trying to say.
Yeah,
To me,
so
it
that's
was
why I feel it
more.
was more open, like it was more.
No, it depends on what bar you go into. It depends on what country you're in.
Like the bar was where they have to hide.
Well, the Bahamas is different because we're still acting like we're a Christian nation.
We're not. We're not.
Yes, we're still a Christian.
Mr. Wilkinson, how you come up with that statistic? Prostitution, prostitution.
You mean being the oldest profession?
Yeah, how you come up with that?
Oh, he just Googled it.
Oh, he did.
Yeah, it's actually in Google. Isn't that
Oh.
amazing?
Yeah, man.
I wonder how they came up with that.
Because historically, the records seem to have shown that whenever all else failed, There was high unemployment, yeah, like that.
I get you.
Yeah.
They were like raw houses and.
That's
stuff.
just a long stretch to say the oldest profession.
Yeah, I know.
More guys.
Well, it was expected back in the
Ladies used to
day,
walk around.
walk
And
around.
everyone knew what they was there
Right,
for.
yeah,
But
like they were
now
gonna-
these girls just
they
been
can-
chilling.
We're gonna broad house or broad house.
Yeah.
Listen, we still have those houses today. They are called cat houses.
Yeah.
You just haven't found yourself in one yet, Vincent.
No, I don't get one. I don't want to do that.
They don't call them brothels anymore. That's an old Bible name.
Right,
They
broad
call them cat houses. And in those days, when you walk around in a brothel, women were dressed until you undressed them.
Yeah.
But nowadays, when you walk in a cat house, they are anywhere from almost naked to completely naked in a cat house.
So
In a
where's,
brothel,
so where's the cat house?
and stuff.
Where's the cat house in Nassau, Mr. Wilkinson?
So, so
You know a lot.
I just need that little bit of information.
Yeah.
what information is that?
Where's the cat house in Nassau?
I don't know. But I understand we have some hanging around. See, there's a reason why we call them cat houses. In the old days that Vincent is talking about, they were brothels and they were almost like dog houses.
Right.
And the reason why we say they're like dog houses, because dogs are easy to figure out. The reason why we call them cat houses now, because they are hidden. You have to find them. For example, have you ever seen a cat have babies?
No.
No. But you've seen a dog, wherever dogs ready to lay right there, have it. They don't care, but you don't see cats have babies, because they are hidden.
I think they call it Castle.
No,
I think one is across from the tiki hut.
well,
Walk deep.
there you go. She has an idea where one might be. But that's the same thing. When a cat have a baby, you don't ever see them. You only hear meow afterwards.
The one cross from. Little sidewalk.
Well, if you have to try and figure it out, that means it's a cat house. In the old days, it was a brothel. You didn't have to figure it out. It was right there like this. You go right in like that. That's the whole point. Okay, by all means. So today it is far more expressive than it could ever have been back then. Okay? In the old days, a female prostitute was completely dressed. You don't see her walking around half naked. No way. Everybody knew she was a prostitute, but she never walked around half naked.
I mean, I would have been good sound like in like reading about it was like it was more accepted. That was like a career for
It's a
woman.
no.
That's all
See,
they say.
listen to me carefully, Vincent. Just how it's a career for men to buy women, it was a career then and it's a career now. In fact,
I'm not saying like this.
I know what you said. I know. I'm just trying to sort out some of the cobwebs that you might still have. I understand what you're saying.
Young, so it's,
Yeah, I know. And hopefully, in a few years,
yeah.
you'll get it completely. Sorry for him, he has a lot more years
Yeah.
to go. All right. So keep going. Cameron, you started this valuation thing. Let me get the doggone thing up. Oh, I know why I brought it up. Sorry, Cameron. I remember. The reason why I brought it up is because in the marketplace, like how we do this, like in the valuation of an asset, you add all these things in. In this business, they have different types, just like in other business, different types of inventories, goods being sold and so on. So, for example, if you go on the streets, you'll see half-dressed women selling their bodies, but their bodies are cheap on the street. However, if you go in a hotel, it's a different kind of prostitute. And their services are much more expensive. For some reason, Vincent, I wonder why. They're all women. How come this one is $10,000 a night and this one is $2.50 or some nonsense? No, because that's out of your,
Well, really,
Big time.
Yeah.
You can't even smell a perfume without dropping dead.
People spend that money. right?
Easy,
No,
twice
yeah.
that,
Mhm.
3 times that.
People spend that.
Okay, people like you, dudes,
Like me?
not like you. They'll waste money doing that, and if somebody says, "Can you buy me something to eat?" they will not even answer them. Well, that's a whole other thing. I just thought I'd throw that in for Cameron's edification. He's the youngest in the room. Okay, keep going, Cameron.
Other costs for ordering, receiving, and storing should in principle be included in inventory costs. In practice, however, it is so difficult to allocate such costs to specific inventory items that they are usually considered expenses of the period. Inventory valuation depends on the price of goods, which usually vary during the year. A company may have purchased identical lots of merchandise at different prices. Also, an identical item, it is often impossible to tell which has been sold and which are still in inventory. Thus, it is necessary to make an assumption about the order in which items have been sold.
Mm,
Because the assumed order of the sale may or may not be the same as the actual order of sale, the assumption is really about the flow of cash rather than the flow of physical inventory.
Interesting. So now we're getting into when goods are bought and sold, is it more important to consider what is sold first and what is sold last, or to consider what is actually received and paid for cash in terms of the transaction? Okay, I think we all would agree that the dollar value issue is much more important than what was sold first and what was sold last and what came in first. Okay, for sure. For example, remember if 15 cases of cream comes into Super Value 6 months ago, and then another 15 cases come in 6 months later, another 15 cases come in 6 months after that. Technically, which one should we sell first? But how we determine which ones came first, and as we go through a big old headache to make it clear which one. And if everything is stacked up over in that corner, you think someone is gonna go and say, try and figure out which ones came in first? No, they're gonna grab whatever's to the front. And then they keep put something front new. So the ones who came in first in the back to be there for literally? Yes. So when you see stuff on the shelf, they may have been things that may have been there literally for a very, I know, nobody has that conversation. For sure. Okay, it is absolutely crazy. All right, so in terms of the flow of goods, that's a very tricky area for obvious reasons. All right, keep going, Cameron. Goods flow and cost flows.
Goods flow refer to the actual physical movement of goods in the operation of a company. Cash flow refers to the association of costs with the assumed flow. The assumed cash flow may or may not be the same as the actual goods flow. The difference arises between several choices of assumed cash flow are available under generally accepted accounting principles. In fact, it is sometimes preferable to use an assumed cash flow that bears no relationships to goods, but because it results in a better estimate of income, which is the main goal of inventory accounting.
Sorry, what's the main goal of inventory accounting? Yeah, but he said something specific. What is the main goal of inventory accounting? He just read it. What did you just read, Cameron? The main goal.
Estimate of income.
A better estimate of income. Okay, and what is income? Money that comes into the business from the sale of goods and services. In this case, merchandising, so goods. Why are we in business anyway? To sell. Why are we selling? To earn income. And what are we trying to do? Keep our expenses as low as possible so that after we subtract our expenses, we have as much money left as possible, called profits. You follow, folks? That's the whole idea, just so that with our salary. And then we get paid, we try to pay the minimum expenses, so we have something left to what? Save. Go to Waikiki, travel, have fun, buy something new, whatever the case might be. All right, keep going.
Merchandise and transit. Because merchandise inventory includes all items that a company owns and holds for sale, the status of any merchandise in transit, whether the company is selling it or buying it, must be evaluated to see if the merchandise should be included in the inventory account.
Interesting. Anybody gets that? If you're doing, let's say you're doing a inventory count and you have goods in transit, what do you think goods in inventory in transit means? It's coming to you, but you don't have them yet. That's what in transit means. Okay? Okay, so Vincent, if your wife calls you and say, I'm in transit, that means she's not here yet. She's on the way. Whether she'll get here or not, is another story. Before she gets here, she may no longer be your wife. Somebody might. Same thing with goods. It's in transit. Until you take possession of it, you cannot include it as yours. See? Kind of like that. So this in transit thing is a very important concept, as simple as it may seem. And remember, it may not seem like a big deal if we're dealing with a couple $1,000s in inventory, but it's supposed to be dealing with a big company like Walmart, millions. See? What is in transit to be included or not to be included is a very important thing to point out. Because let's say you're doing inventory and you include $5 million worth of goods that's in transit that shouldn't be there. Then that's going to overstate your inventory because you don't own them yet, but you've included them in your numbers. And sometimes these guys actually do it knowing that they shouldn't. It's called cooking the books. So the things look better than they actually are. In case you thought you were just reading some crappy stuff, Cameron. It's not crappy, far from it. Because when you translate it from a few $100s in a mom and pop shop to a few $1,000s to $1 million, millions of dollars, and then billions like in FTX.
Have you witnessed that?
Sorry?
I mean, with your experience, have you witnessed that, like seeing, like going over work where
People have inflated the amounts, of course. Companies inflate amounts all the time, revenue, expenses, all, whatever category they choose to achieve the objective. That's why we have auditors come in. And then some auditors have been found guilty of finding out that they've done it and not reporting it. Just for money or friendship or the oldest profession in the world, maybe. There have actually had cases where guys have taken auditors on trips and, you know, like to Waikiki or whatever, someplace, having fun in a hotel or whatever, entertaining, drinking, carousing, and chicks in bikinis. So that auditors can do whatever they are told. That should never happen. But every now and then it does, unfortunately. Okay, keep going.
Neither the seller nor the buyer has physical possession of merchandise in transit. As Exhibit 1 shows, ownership is determined by the terms of the shipping agreement, which indicates when title passes. Outgoing goods shipped or FOB, free on board destinations are included in the seller's merchandise inventory, whereas those shipped FOB shipping points are not.
Now, folks, be very clear on this, what appears to be an important point. If the shipping agreement is FOB, free on board, that means the buyer has not gotten the goods, and therefore they have to go into the seller's inventory at the end of the year if they're still there. However, if the shipping agreement is FOB destination, then the goods have to go into the buyer's inventory, even though the goods may still be on the shipper's dock. You follow? It's all about the agreement. Now, that may take a little bit to settle down. Until then, you just accept it as a rule. If the buyer and seller are doing the inventory at the end of the year and the agreement is FOB free shipping, then it goes into the seller's inventory for that end of the year. If the agreement is FOB destination, then it goes into the buyer's inventory for that end of the year. Doesn't matter if the buyer has possession or not yet. It's all about the agreement. Is it a what? Free on board or is it a shipping destination? Wow, it's amazing. The little bits and pieces that matter. And remember what I said. If you're just talking about buying this little itsy bitsy car, it may not seem like a big deal. But remember, when you start getting into the millions of dollars, these technicalities about FOB shipping point and FOB, see my point, destination, become a multi-million-dollar question in terms of valuing inventory and determining net income. Wow. For a company. All right. All on it. Okay, keep on going, Cameron.
Conversely, incoming goods shipped FOB shipping points are included in the buyer's merchandise inventory, but those shipped FOB destination are not. Merchandise not included in inventory. At the time a company takes a physical inventory, it may have merchandise to which it does not hold title. For example, it may have sold goods but not yet delivered them to the buyer.
Interesting. It may have sold goods, but not delivered them to the buyer. But because they have not delivered them to the buyer, it doesn't mean that the seller can put it in their inventory at the end of the year, because the sale has already been made. Once the sale is made, even though the shipment is not yet delivered, who owns it? The buyer, absolutely. The seller can't say, I still have it in my warehouse to carry. So therefore I'm putting it in my inventory. Once you've sold it, doesn't matter where it is. It belongs to the buyer. How about that? Little serious and important technicalities that can end up in court even, depending on the situation. Being contested. Because remember, oftentimes millions of dollars may be involved, not just a few $100,000. Okay, keep going.
But because the sale has been completed, title has passed to the buyer. Thus, the merchandise should be included in the buyer's inventory, not the seller's. Goods held in consignment also fall into this category. The consignment is merchandise that the owner, the consignor, places on the premises of another company, the consignee, with the understanding that payment is expected only when the merchandise is sold, and that unsold items may be returned to the consignor.
Now, folks, I don't know if you ever heard about consignments, but it's an interesting thing to know. Okay, just for information, not only for examination. A consignment is when the owner of the goods, let's say, for example, I am Toyota USA, and I give you 300 cars on consignment. You bring them to the Bahamas to sell, which maybe some dealers might be doing. Okay, when they come to the Bahamas to sell, they belong to me, Toyota in the US, until you sell one of them. Once you sell one of them, there will be an agreement that Toyota gets its cut and you get your cut. That's how consignments work. And until you sell them, they belong to Toyota, not you, in the Bahamas. Okay? Anything that is unsold and has to be returned, they should be returned to the consignor, the person who gave them to you to put on your lot to sell. Why are you selling in the Bahamas? So you can make something off each deal. Called a commission. That way you don't have to buy inventory, you just sell it and make some money off it. Okay, that's how consignments work. And we do have a lot of consignment arrangements are in and around the world. Just a lot of times people are not aware of it. You might pass a particular type of business and see all kinds of inventory sitting there, like cars, boats, whatever it might be, they're selling. Say, wow, that person must have a lot of money. Not necessarily. Those goods might be on consignment. They don't own any of them. They only own the right to sell them and earn a commission on each sale, which is not a bad deal either. Because then the owner has to bring them here. They have to ship them over. They have to, whatever the case, pay insurance to cover them. All you need to do is sell. And that's important. All right. Anything else under the consignment?
Title to consign agreements with the consignor until the consignee sells the goods. Consigned goods should not be included in the consignee's physical inventory.
Why is it that the consigned goods should not be in the consignor's physical inventory? Go ahead.
It's already sold.
Even if it's not sold, it's already in possession of who? The consignee. Yeah, the property in Nassau, where it's going to eventually be sold. Okay, in other words, technically, once the consignee or the person who owns them turns them over to the consignee, you still have legal title to them, but you cannot include them in your inventory. Okay. Yeah. Yeah, sometimes it appears that way, but that's how it has been established over many, many, many years of practice.
So,
No such thing.
Oh, may see you for the law.
Of course, and not asking question is a terrible sin.
no, but what I said is how does that work? So, like say something more, right? If you bring in all those Kias, Toyotas on consignment,
Yes,
you have salesmen who working on commission as well,
right,
and you getting a commission,
right.
how does that work?
Everybody find a way to get their cut.
That's crazy.
And if you can't find a way, then you don't do it.
That's crazy though. So if you were selling, now you making money.
Yep, if who is not selling anything?
Like say something doesn't sell like, for 2 months. They
You mean nobody buys anything?
like I say. Like,
Yeah, well, that's part of the problem. Just like people who work on commission.
so
If you don't sell
that's-
anything, you don't make a
that's what I'm
commission.
getting at. Most of their people are their marketing team on commission, or do they make the salary?
No,
Is it in-
again, it depends. Some arrangement might be, if you sell, you get paid. If you don't get paid. Nothing. Or the arrangement might be, we'll pay you what? Minimum salary, $200 a week, and then for everything you sell, you get X%.
So that's why most, like thinking about it now, that's why most of them have deals with banks. That's why it
Maybe,
would be
depending on the arrangement.
arrangement, right?
People in insurance, for example, you go to work for an insurance company, you might be working strictly on commission. So for every policy you sell, you get a commission based on that policy. Or you might be on base salary plus commission, just depends on the company. Same thing happens potentially with a consignment. Okay, absolutely. All right,
Real estate.
same thing. Okay, you could go and work for a real estate company and they might say, we don't have the money or we're not interested in paying you anything every week. If you don't sell anything, too bad. No. Go back and join the old list firm until you sell something.
That's hard, because
that's what I'm
months
saying.
might go by, you don't see
You don't
nothing.
sell-
That's why a lot of times you might see somebody in real estate 1 month or 2 or 3, and then you don't see them anymore. Because things get difficult, they don't have sales, and then they don't really have the resources to keep them afloat until they can make a sale. That's the problem with real estate. You have to kind of have a float.
I think that might go right back to that's why.
Of
they
course.
bring down people at times, because I know at something, when you go buy a car, they send you to a bike and tell you to talk to this person or whatever, makes sense.
And so, yeah, because of that, all kinds of different other deals
Mhm.
are made in order to compensate in one form or another. By all means.
Makes sense.
But it is risky business selling anything on commission. Because you don't know when somebody's going to buy. Okay, you might have a major sale where you sell a piece of property if you're in real estate for $500,000. You could float on that until thy kingdom come. You're 10% commission, see? And so if nobody buys anything for 1,000,000 years, technically, you're okay. Or not. You may only sell a little skimpy thing here, a little skimpy $30,000, $100,000 property, blah, blah, blah. And so you only have a limited amount to float on. And again, so those persons who are successful enough, quote unquote, and making sufficient and consistent sales, they get to continue in that business. Those who don't do so well, you notice they will shift and go to some other kind of business. All right. So remember we said, having said that, now we know how the business of inventory works. Who should take title, who should not take title, under what conditions. Very important to make sure that the proper inventory numbers are reported by the buyer and by the seller. Okay. The other thing you need to know is that inventory is normally valued at what we call the lower of cost or market, which is this. Okay? In other words, if you are recording your inventory at the end of the year to put on your balance sheet, if the cost of the inventory is $300 and the market value for whatever reason is $250, in accounting, which one should you use? Based on the low of cost of market rule. Which one should you use on your financial statement?
Can you repeat that again?
Under the law of cost of market, we say if the inventory is going to be placed on the balance sheet at the end of the year, the cost of the inventory, that cost should be either the lower of the cost of it or the market value. You paid, the cost of it you paid is 300. At the end of the year, the market determined is only worth 250. Which one should you use under that rule? The 250. Okay, accounting will always lean towards what? The more conservative, lower amount. Not like appraisers who always like to lean to the higher amount, depending on what they're appraising and who they are appraising for. And sometimes if they don't like you and you go for an appraisal, they might have paid you from high school and give you a bad appraisal. Is that possible? Hopefully not. That would be unprofessional, unethical. But who knows? Folks do strange things. All right. So having said that, we can now go over to page 268 to see what these four methods are under the periodic system. Now, because I didn't have someone read that little bit leading to the end in the summary of inventory decisions, doesn't mean you shouldn't read it. Because when you read it, you'll discover that much of what we said is embedded in there. The reading will just solidify, hopefully, in your mind. Remember I said reading stinks, but it's a necessary evil. All right. We need somebody online. Who's online still? No answer.
Everyone.
Everyone. I like that. Just everyone. What did you think? Oh, Anik, is that you said everyone?
Yes.
Oh, somebody knows your voice. They said that's Vanique. So you are known by what you are known by. In case your voice, that's Vanique, I'm sure of it. Okay. So who wants to pick up the reading online? We already had somebody read offline. Volunteer.
I could read.
Who said that?
Vinny.
Hey, Vanique. Krista. Say Vanique. Okay, Vanique. Why don't you go to page 268 and beginning at the top, where we talk about inventory costs under the periodic inventory system.
Okay. The value assigned to the ending inventory is the result of two measurements, quantity and cost.
Oh, sorry, what is that again? Quantity and what?
Cost.
Okay, let's just put that here because if you forget that at any time, valuing inventory at the end of the period is going to be a nightmare. Okay, so let's put those two words here, quantity and cost. Okay, let's go.
Under the periodic inventory system, quantity is determined by taking a physical inventory. Cost is determined by using one of the following methods, each based on an assumption of cost flow. Specific identification method, average cost method, first in, first out method, last in, first out method. If the prices of merchandise purchased never changed, inventory methods would be unnecessary. However, because prices do change, assumptions must be made about the order in which goods are sold. The choice of method depends on the nature of the business, the financial effects, and the cost of implementation. To illustrate how each method is used under the periodic inventory system, we use Boylan Company. The following data for April, a month in which prices were rising, are available.
Interesting. Now, if you look at this information, are the prices rising in this particular example? Yeah.
Yes,
The first amount is how much? 160?
that's
$10.
160 units at $10.
Oh, 60 units at $10. Oh, 1,600? So now we're back to this. In this example, quantity is how much? 160.
160.
And cost is how much? $10. So all of a sudden, it's a little calculation rears its ugly head already. What's the next price in this assumption? I mean, in this data,
5,500.
what does the 5,500 represent?
440 units at $12.50.
Question or statement?
Statement.
Okay, does everybody agree with her? Where did the 440 units come from?
Because they purchase more stuff.
Well, have we done any purchasing yet, or are we just looking at data? We're just looking at data at the moment, I believe. All right. Now, so here's how we read the data. We start at the top left and we begin, it's for the month of what? April. What's the first day that we're looking at in April? April 1st. We have inventory, and then on the right-hand side, what does it say?
160 units at $10.
Okay, equals?
$1,600.
Okay, that's the data for April 1st. Then on April 2nd, what happened? Sorry, April 6th, what happened?
It's a purchase.
You made a purchase for 440 units at
$12.50.
$12.50. And that equals?
5,500.
Yeah, notice I didn't try to like go all over it and try and scramble over it. You go at the top and you follow the data down in a chronological order. Welcome to accounting. Accounting is a very orderly profession. We don't do stuff helter-skelter in accounting. There's usually an order to it. And if you don't follow the order, you're gonna run into trouble. All right, any other transactions after the 6th?
25th,
What happened?
another purchase.
Another purchase of how many units?
400 units at $14.
Total?
5,600.
All right, so now, what does the next line tell us?
Goods
Goods
available.
available for sale equals how many units?
1,000 units.
How did we get 1,000 units? And this is how I want you guys, whenever you're reading this stuff and studying and reviewing it, keep asking yourself, how did we get it? Why did we get it? Where did the dollar amount come from? What did we multiply to get it? It takes a few more minutes to bother yourself about it, but that way you make it clear in your mind. So exam time comes, you're like, what the hell, we did this? Because like you didn't really commit to the format and structure. All right, so goods available for sale equals?
1,000
Get it.
units.
We added all the merchandise from April all the way down to the last transaction. So we added what we started with, plus whatever purchases we made, correct? So beginning inventory, so we can start saying something. Beginning inventory. In this example equals how much? April the 1st.
160
160 units.
at $10
Yeah, at $10
equals 100.
equals 1,600. Then we have purchases on the next date. How many units?
140,
440 times.
$12.50.
Notice the price has gone up from the 1st to the 6th. Just like when you go on Super Value, buy coffee for $10 one week, the next week it goes $15.37. You know how the hell they go from 10 to 15? Because they keep changing it depending on the returns that they want to make. Okay, and for those of us who are not watching it, we may not even recognize it. We just love coffee so much, we grab it, throw it in.
Mhm.
You don't check the price. 440 times 12 equals?
No, it's $12.50,
Equals? Yeah, 1250 equals
5,500.
5,500. And then we have another purchase,
25th,
okay, plus another purchase,
400 units
400 units
at $14
at 14, gone up again,
equals 5,600.
5,600. No other transactions. So the goods available for sale in accounting, we call it gas. Goods, to help us remember, goods available for sale equals the sum of all the goods we started with plus purchase, which equals 1,000 even,
1,000 units.
okay. At what dollar value total?
12,700.
12,700. So that's our data. But unless you walk yourself through it, or we walk ourselves through it, it'll be more of a nightmare than it needs to be. And I think now that we put it that way, because even that on the board looks different from the book, even though it's the same for some reason. But the book always makes things look what, weird. Spooky. Booky. All right. Do we have all the data from our textbook on the board?
No,
Oh, we're not done. That's what I was waiting for someone to say. We're not done. We don't have all the data yet. What is missing?
there's so much we sold,
Yeah, so we sold how many units?
560.
On which date? No date. We just sold it.
Yeah.
How much?
560.
560. Okay, for how much? How much? They didn't say. My. So that means that since we don't know how much it was sold for, we only have the amount of units sold, correct?
Mhm.
And after the sale, what do we have left?
That's that.
Does the book give it a name?
No, on hand. On hand, April 30th.
They just said on hand. Okay. April 30th, which is the end of the month. And how much inventory is on hand at April 30th?
440.
440. Now are we done with data?
Yeah.
Yeah, there. So based on this data, we saw how much inventory we had at the beginning. See, again, remember, management is using this information to make decisions and to find out what's going on in the company. And remember, we're dealing with a couple $100, couple $1,000. In reality, we could be millions or even billions, depending on the inventory. A diamond company can have 3 pieces in inventory that cost $2 billion, true? Just 3 pieces that they have under lock and key. If you even look that way, you'll go blind. Some chemical go in your eyes and blind you just for looking that direction. That's how it is because of the value. All right. So in this example, we know how much inventory we had at the beginning, what the cost was. And then we saw what we purchased during the month of April, a total of 1,000 units. We sold 560. Now at the end of April, we have 440. And here is the issue. The real question is, how in accounting do we value the remaining 440 units so that when we put the dollar value in our balance sheet, it represents the best value available for those remaining goods in inventory? Does that make sense, folks? Absolutely. And so for the next few moments, we're going to be spending time looking at these 4 inventory costing methods and apply them to what? Whatever's left in inventory. Because remember, we have the number of units here left at the end of the month, but we don't know what the cost of those units are. And in accounting, we can choose 1 of 4 methods to do it. One is not necessarily correct over the other. They're all available for use. Companies will decide which one based on their objectives, and those objectives will vary according to the company. Okay, all right. So let's look at the specific identification. Vinique?
The specific identification method identifies the cost of each item in the ending inventory. It can be used only when it is possible to identify the units as coming from specific purchases. For instance, if Boylan's April 30th inventory consisted of 100 units from the April 1st inventory, 200 units from the April 6th purchase, and 140 units from the April 25th purchase, the specific identification method would assign the cost as follows.
Skip the chart for a moment, go under the chart and read what's there.
Although the specific identification method may appear logical, most companies do not use it for the following reasons. It is usually impractical, if not impossible, to keep track of the purchase and sale of individual items. When a company deals in items that are identical but bought at different prices, deciding which items were sold becomes arbitrary. If the company were to use the specific identification method, it could raise or lower income by choosing the lower or higher price items.
Yes, in other words, while the specific identification method might be practical in principle, like academically, most companies don't tend to use it because it can be used to manipulate the numbers. And certainly, if you have a whole bunch of products that are the same, like cream, it's going to be hard to say which cream came in and which came when each one was sold. Almost impossible. Same goes for any other products that are similar. Okay, so while we can account, now, a type of company that might use specific ID might be a jeweler who has a limited set of what? High value jewelry items, or a car dealer who has a limited 300 very expensive car, Lamborghini. See my point? So that person might use the specific ID because every day they want an accounting of what was sold and what was left. Because we can't afford to have somebody trying to sneak off with an entire Lamborghini. But make no mistake, if you don't have the checks in place, will people try and take it? Employees. If you don't have any checks in place, people sometimes take it with your checks in place. Okay, so in this specific identification method, the calculation is very straightforward. We're saying that 100 units on the specific ID comes from where? What did Vinique say? 100 came from where, Vinique?
100 units came from the inventory, right?
Which inventory?
April 1st inventory.
Yeah, remember in accounting, everything is important, the date, the amount, what is debit, what you credit. That's why sometimes, for example, when I ask Crystal to do a journal entry, she'll say, accounts payable 3,000. She forgot to say debit accounts payable. And then I'd be like, anything else you like what? That's it. I'm like, yeah, you're correct, but you have to say debit accounts payable, credit the other account, see? And so $100, 100 units comes from April 1st, which is the beginning inventory, yes?
Yes,
Okay, so 100 units. At what cost?
$10.
$10 equals $1,000. Okay, what else, what's the next assumption we make on the ID?
200 units from the April 6th purchase.
So 100 units comes from here. And so that's, how much is left here?
60,
How much comes from here?
200,
200. And what's left?
240,
240. So that's 200 over here. At what price? Cost, not price, cost.
$12.50,
$12.50 equals
2,500.
2,500. And then finally, anything else?
140 units from April 25th purchase.
40 units, what's left?
$360.
360. So 140 from here times what amount? What cost?
All right.
Sorry? 140 came from here. At what cost?
Minus 140.
$14 equals
Oh, 400 minus
60. Now, what do these amounts over here represent, class? On the specific ID?
What left, let's go back. What left from after we take the 140 should be 260, not 360.
Oh, 260. Funny things happen with calculators. Be careful. Exam time, 260. So what do these units represent here? This, and this. So do these represent goods that were sold? Is that what Vanique said?
Yeah,
What kind of inventory?
It's being specific. How many uses like that particular price?
This 100, does that represent units sold?
yes.
How do you know, Vanique?
Because it's saying that in the charted up cost of goods. So we already know that the sales amount was 560 units. So all they do is specify where it came from.
So where did you get 500? You mean you added these?
The first chart tells us that the sales amount is 560 units.
You
When
mean
we-
this?
Units, yes.
Yes.
What do these units total? These
Um,
three.
Mm, 40.
So what is over on this side then is what's left in inventory,
Mm,
this. In other words, this information on the specific ID is not what's sold, but rather what's
left.
left. So if this is what's left, how much is sold on April 1? 60. How much was sold on the next bid date? Sorry? 140? 240. And how much was sold down here? 260?
260.
60.
Mm.
If we add these three up, what does that give us?
16 plus
Yeah, you do need a calculator or two. In case one doesn't work.
560.
560. So then, these units that identified a specific ID for the three periods in question are the units that remain in inventory. In other words, at the end of the month, when this company takes stock using specific ID, they are saying 60 units were sold on April 1 and 100 remain. Does everybody see that? 240 was sold and 200 remain in inventory. 260 was sold and 140 remain in inventory. So according to your chart, what is the cost of goods sold?
$7,240.
7,240. Where did that come from? Well, it has to come from this category here. Let's do something else. Let's find out the cost of the goods in inventory. These three are what's left in inventory. What's the total? 5,460. So you have 440 units left at a cost of 5,460.
Mhm.
If we subtract 5,460 from 12,700, what do we get? 7,240.
240.
Cost of goods sold. Does everybody see that? Now, remember I told you, this is not something that drops into your soul like in an instant. You have to go through the discussion and then do it again. And again, depending on who you are. Okay? So under specific ID, we're saying at the end of the month, the company takes stock. Anybody ever took stock in this class? No, you guys are very fortunate. You don't have to come in chains and count all those stinky things one by one. But this company is taking stock. At the end of the month, they're saying, using the specific identification method, because you remember this company is making the assumption that they can identify every single item in their inventory. And so they're saying, because we can be making that assumption, we're saying that 100 of the units from April 1 are left at $10. The other 60 was sold. 200 are left, the other 240 were sold. 140 is left at $14, the other 260 were sold. So we sell 560 units, which we know to be true, and we have 440 remaining, which we know to be true. And after that, the dollar value is simple. You just take each one times the cost of the item, add it up. So we have 440 units left at 5,460, and we have 560 units sold at 7,240. And if I hope you guys have seen at this point that in order to come up with cost of goods sold, see, cost of goods sold, all you have to do is take away what? Ending what? Inventory. And under the specific ID method, the ending inventory is equal to How much? $5,460. Yeah, let that sink. I see some person's making notes, that's good. Because this stuff, if you don't make a note or two somewhere mentally or physically, when you go to sleep and get up, you're like, man, was I ever in that world? Did we even talk about it at all? All right, Vinny, average. I know this stuff is crazy, like any other learning. That's not unique to accounting. Learning in any capacity is help. Just as some odd things a little more hellish than others. In some instances. Okay, average cost method, Vinny.
Under the average cost method, weighed average method, inventory is priced at the average cost of goods available for sale during the period. Average cost is computed as follows. Average cost equals total cost of goods available for sale
Sorry, total cost of goods available for sale, okay?
divided by total units available for sale.
Man, it can't get easier than that. That's the average. Whoever gets average wrong has been completely asleep. The simple formula, the average cost method says we take the total cost of goods available for sale. Well, how many goods available for sale in this data? Because this data never changes. 1,000, way to go, Crystal. It's kicking in. Yeah, as it-
Wide awake.
Man, as it gets later, she's getting more keen. Most times it's the other way around. Like, man, don't ask me anything, I'm asleep. So yeah, the cost of goods available for sale, I mean, in units is 1,000 units. And we know that 1,000 units equals what total cost? 12,700. So cost of goods available for sale, if we follow that, is 12,700. Is that what your textbook has? Is that what it has?
Yeah, 12,700.
Okay, in that green box. Divided by total units available for sale. How many units available for sale? 1,000. See that? Man, that's a sure 100% of that part of the question. Equals $12.70. And once we come up with that average, we apply it to everything. So once we know what the average cost is using the average cost method, we can then take the goods that are left in inventory. How much is left in inventory? 440. And we say 440s are left because we know that this scale doesn't change. We're going to use this straight through for all the methods because this represents the transactions for the month of April. And remember, in the real world, once the transactions occur, you can't change them because you feel like it. This is what happened in April. And so we're stuck with that. All we're doing is taking the data in April and doing what we have to do to find out what the cost of inventory at the end of April for goods that are left. Under the specific ID, we identified for each date. On the average, all we do is work on the average and multiply by the inventory that's left, which is 12.75. Is that what it is? 75? 70 equals 5588. Is that what your textbook says? Okay. Simple as sin. Anybody knows why we say simple as sin? Crystal, yeah, yes, absolutely. It's easy to do bad things. Even little children, that might be like 2 with their hand in the cookie jar and all kind of cookie on their mouth and eating it. John, are you moving cookies? He said, no. John, I see you eating it. Tell me the truth. Are you eating and removing the cookies? And he said, no, mommy. John, you're a liar. You are. And you'll be right there crying. No. Who knows why that happened? Even with little innocent John, it's not his fault. He's only 2. He don't know the hell. He don't even know he's alive yet. Well, I know we don't like to say it, but the reason why even little Johnny will lie at 2, it's not his fault. Because we are all born in.
And
Yeah, that's the sin nature. Notice, we don't have to teach our children how to do the wrong thing, do we?
no.
We spend a whole lifetime in it growing up teaching them how to do the what? The right, because the right thing doesn't come naturally. The only thing that comes naturally is the wrong freaking thing.
Yes.
That's amazing, isn't it? My. All right, so far we've covered 2 assumptions. On the periodic, the specific identification, we value the ending inventory at whatever we valued it at, and now we value the ending inventory at average price. Now, once we have the ending inventory, under average cost, what is the cost of goods sold? It should become almost automatic now. What's the formula for cost of goods sold? Gas minus ending inventory. In other words, what you have available minus what you have left equals what you sold. True or false? True? That's your formula. Folks, that's an important formula to know. The formula for cost of goods sold is equal to goods available for sale minus ending inventory. You are now experts at goods available for sale. You are experts at ending inventory. So now you need to make sure you know this formula for cost of goods sold, because questions will come up in your homework and your exam to calculate not only the ending inventory, but also the goods available for sale, and most importantly, be able to determine the cost of goods sold. And the only way you'll be able to determine that if you know this formula. Cost of goods sold equals. Excuse me, cost of goods sold equals the sale minus,
Ending
Inventory.
and that doesn't change no matter which of the 4 methods you use. All right, so 2 down, 2 to go. Okay, Veronique, first in, first out.
The first in, first out method assumes that the cost of the first items acquired should be assigned to the first item sold. The cost of the goods on hand at the end of a period are assumed to be from the most recent purchases, and the costs assigned to goods that have been sold are assumed to be from the earliest purchases. Any business, regardless of its goods flow, can use the FIFO or FIFO
Yeah.
method because the assumption underlying it is based on the flow of costs, not the flow of goods. For Boylan, the FIFO method would result in an ending inventory of $6,100 computed as follows.
Okay, now let's see if we can do it from our data on the board. I mean, you can use your text as well because it looks much neater than this, whatever this is now. You're beating it to death. So FIFO assumes what? That whatever goods come in first are sold first. Simple as that. That's the assumption. So how do we go about setting up the FIFO table to determine cost of goods sold? What do they tell us to do? Use your text. What's the first thing we do? On the
Cost
FIFO,
units.
sorry?
We looking at the table?
You can use your table in your text, or we can use the table on the board. Because this data never changes. This is what the transactions in April. So,
Okay,
okay,
so
okay, give it a shot.
400 units.
First step. First of all, ask yourself, how many units in inventory do we have? We already know that from the beginning.
40 left, right?
And 40. Now, that means under FIFO, we have to find out what units in the transactions during the month, based on our assumption, is gonna go first, second, and third. Until we get to 440 units of inventory. So if what came in first is sold first, what is sold first? Sorry?
This look opposite for me. Is it April 6th stuff?
Well, no, yeah, you're getting into the other one.
Go backwards, like from the later date. This is when they started with the later date.
What did the textbook start with?
April 25th.
And what did they say?
400
Is that under FIFO?
Yeah.
Yes,
Okay,
400 units at $14.
okay, 400 units at $14 equals
5,600.
600. And then
40 units at $12.50.
40 units at
$12.50.
equals
$500.
$500. Now, before we go any further, does that format seem to follow first in, first out?
No, not for me. No,
That seems to conform to last in, first out. But what came in last according to this? 400 units, right? But you're saying under FIFO, we are saying we're starting with what came in on the 25th, correct?
Yeah.
Why are they doing that? Is there an explanation, Vinny?
this part here say, thus the FIFO method values the ending inventory at the most recent cost and includes earlier costs in the cost of goods sold.
Say that again.
Thus, the
Says
FIFO
does what?
method values the ending inventory at the most recent cost.
At
And
the
include-
most recent cost. Stick a pin. What is the most recent cost? $14. Now that's the point. See, if you miss that, then you get stuck. FIFO values the most inventory at the most recent cost. Okay, and the most recent cost here is $14, and the most recent units at $14 is 400. We have 40 units left, so the other 40 needs to come from the next most recent cost, which is $12.50, but we only need how many units out of here? 40. That's how FIFO works. Key to remember, it is based on the most recent cost. Okay, not the amount of units that were there first. Boy, that's a slick point. Write it down if you have to, or if you have one of those photographic memories, fine. FIFO is based on the most recent costs. And in this example, the most recent cost is $14. So now we can come up with our ending inventory valuation under FIFO. How many units total in inventory? 440. I mean, that's a song and dance now, isn't it? Don't we know that from all the other ones? And from the beginning. And then what's the cost of the inventory? Under FIFO.
6,100,
Sorry,
6,100.
6,100. So the cost of your ending inventory is 6,100. Using the formula, what would be your cost of goods sold calculation? Using the formula, which is 12,700 minus, which is
100.
6,100. So your cost of goods sold under FIFO,
6,600.
is that what's in your textbook?
Yes, sir.
Until once you get it down pat like that, it's like nothing. Over here is your transaction data. Sorry. Over here is your transaction data for the month, never changes. Shows you the total amount of goods that you have available for sale. It's easy to determine what was sold, get it from the cash register. 560 sold, and if 560 is sold out of 1,000, then you have 440 left. The only question now is which of the four methods you're going to use to value the 440. The first method we saw was specific ID. The second method we saw was the easiest sin average. The third one we saw was FIFO, which began to be confusing until we said, oh, FIFO is based on the most recent cost. Once you say that, you're like, oh man, take me in your arms, and that's a piece of cake now. Because before that cost thing, we're getting all mixed up, aren't we? Because we're looking at FIFO made first in, first out, meaning what inventory was there first. That's not what FIFO means. But students have been getting stuck with that for centuries. Let's say in one point. So now, Vanique, we're on to the last method, which is the opposite of FIFO, and it is called?
FIFO.
Yeah. Can you read that section?
The last in, first out method of costing inventories assumes that the cost of the last items purchased should be assigned to the first item sold, and that the cost of the ending inventory should reflect the cost of the goods purchased earliest.
See, the opposite. The cost of the ending inventory, which is the 440, should reflect the cost of the goods sold, purchased earliest. So in our data, the earliest purchase was what?
April 1st.
April 1st at $10. So if we're gonna come up with a valuation for the 440, we have to start here. 160 at $10. Is that what your text is telling you?
Mm-hmm.
Yeah. Let me just put a line here. 160, because here now under LIFO, we're looking at the earliest cost. Under FIFO, we're looking at the what? Latest cost. So the earliest cost is 160 times 10, which equals
1,600.
1,600. And then out of this 440, we don't need the full 440. We already have 160. So 160 from 440 is what?
280.
280 at the next cost, which is
550.
the 1250, which equals
3,500.
absolutely. So now the ending inventory is 160 plus 2. What the heck is that? 280 equals
440.
440. Total cost of that 440 under LIFO
5,100.
100. And cost of goods sold using the formula under LIFO
12,700.
is that what's in your textbook? Yeah, see that? Man. A few notes here and there. Once you get that earliest and latest costing down back to FIFO and LIFO, the rest is like a piece of cake, true or false? Yeah, that's sick. But before that, You're like, man, I don't even know why we have to do this chapter. Because it is so overwhelming, it seems, but not anymore. Okay. Now, I have a question for you guys right off the top. If we look at the 4 methods under perpetual, take a quick look at it. Even without going through it. Take a look at it. Each of the 4 methods under the perpetual. Are they identical or similar to periodic? It looks identical. Has anybody been able to spot any difference whatsoever in the 2 methods? Periodic versus perpetual in terms of the structure? Or each and every one of them identical?
Looks like perpetual is a bit longer, more information,
Interesting,
more content.
very interesting. Let's see something. Let's go to page 274 and have a you know something, Vineet, you started all this. You might as well read that one more paragraph. Read that one more paragraph under perpetual inventory systems. Let's see if anything interesting comes up in terms of similarities and differences. Just that
On
paragraph.
Page 274.
Yes.
Under the perpetual inventory system, inventory is updated as purchases and sales take place. The cost of goods sold is accumulated as sales are made and costs are transferred from the inventory account to the cost of goods sold account. The cost of the ending inventory is the balance of the inventory account. Goods are valued using one of the following inventory costing methods: specific identification, average cost, first in, first out, or last in, first out. To illustrate the costing methods under the perpetual inventory system, we continue with the Boylan Company example. The following data for April, a month in which prices were rising, are available.
Is that the same data as periodic?
Look like it.
Like the same number, is it the same data? Goods available for sale is 1,000, goods sold is 560, remaining inventory is 440?
Yes.
Are the cost amounts the same, 10, 12, 15, $14?
Yes.
Same data. Which means that really, if it's the same data, then why do we have a separate whole bunch of stuff to go through if it's the same? Well, let's look at specific ID and see. Now that you're a pro under periodic, under perpetual, look at specific ID and see if you can say what's happening without breaking a sweat. Like, what's the first item on the specific ID on the left-hand side? Oh, you mean the same thing we saw earlier? 110, keep going. Uh-huh. Didn't we see that on the perpetual? Oh. So if you look at those two tables, what is the difference between the two, if any? There's no difference. Are they identical? Kiss my foot. Case solved for that one. Identical. Now, let's go to the average. When we did average on the periodic, what did we do? What was the formula? Let me see if anybody wrote anything down.
Average cost
Cost of goods available for sale divided by
Divided by total units
total
available.
units available for sale. Is that what we do for perpetual?
Yeah.
Same thing?
Mhm.
No, sorry, no.
We didn't take cost of goods available for sale divided by cost of unit available for sale for perpetual? So Pete, what happened there? What did we do on the perpetual for average? They force us to stop and look at it. Yeah, we were on a roll with the first two. With the first one, and we got stuck with this one. Well, let's go to the top of the average thing. What's the first item on the average? Yeah, which is how many units? Oh, I mean this? Okay. Equals? Is that in your textbook?
Mhm.
Then what's the next item? April 1st again? 6 again, yeah. How many units? At 1250? Equals that. This is for the average thing. And what else? What's next?
Balance.
Sorry? There's nothing, it stops here?
Mhm.
160 plus 440? Equals what?
600 units.
600?
Mhm.
Okay, at what cost? Okay, interesting. Then what happened? Okay, somebody raised some other question. What happens after that point? There's a little writing on the side. What's that? New average computed?
Mhm.
Now, folks, let me ask you something. How many transactions are there at the top? 1, 2, or 3?
So
2. So after the 2, we have goods available for sale of how much? $440 plus 160, how much is that?
600.
600. At what cost?
1183.
How did we get 1183? What do we do?
7100 divided by 600. I don't know. I mean,
Well, yeah, what was the total cost? 7,100?
yeah.
Okay, divided by 600
Good.
equals?
1183.
1183. So under perpetual, because remember, we have beginning inventory of what? 160, and then we have purchases of under perpetual.
440.
440? Okay, and that gives us a total of 600 units. At 600 units, for some reason, we calculate the average, which gives us 1133. Then what do we do next? What happens after that? After we calculate that average
There's an next sale.
of how much?
560 units at 1183.
Oh. So after the 600 units are accounted for, we come up with an average of 11, how much? 83. And we use that 1183 to calculate what? The cost of sales? So what do? We take the 560 and multiply it by what?
1183. Come on.
Okay. 560 times 1183. equals
6,625.
6,625. Cost of sales. Then what happened? Say it again. And that is? Oh, you mean up here was 600 units? That we
Mhm.
did originally for the average. And then we sold 560. And so we have what? 40 units left. At
1183.
1183 equals 475. Are we done? What
Yeah.
else? is there?
Made another purchase on the 400 units.
What 400?
A purchase of 400 units.
Oh, you purchased 400. Ah, purchase. Purchase. 400. At what cost?
$14.
$14 equals
5,600.
5,600. So now, the ending inventory, are we done?
Mm-hmm.
After we purchase 400 units, that's the end of it?
Well, the ending inventory is the 440.
Oh, we
Which
do have an ending inventory.
Mhm.
Ending inventory under perpetual is 440. At what cost?
1381.
13?
81.
1381?
Mm-hmm.
1381?
Yes, sir.
$1,381?
$13.81.
Oh. How did we get $13.81?
The total inventory, which was 6,075 divided by the 440.
The total inventory of 6,075
Uh-huh. Divided by 440.
equals 1380.
1380.
Now, for some students, they want to know, where did the 6075 come from? Where did the 6075 come from?
475 plus the 5,600.
Absolutely. The cost of the 40 units at 475 and the cost of the 400 units at $14 equals 6075. And so are we done? 440 at 1380. 180. Are we done?
Mhm.
Is that where your book stops? 440 at 1380?
It gives the cost of goods sold. And that figure is
Well,
6,600.
what is the actual cost of ending inventory?
6,075.
How much?
6,000.
That's the cost of ending inventory? 6,075. 1380 plus 44 times 440. Okay. And so, once again, even under perpetual, we come up with the ending inventory at 6075. How, using the formula, do we calculate cost of goods sold? Hopefully you have the formula written down. What's the formula for cost of goods sold? goods available for sale. What's the goods available for sale under the perpetual here?
440.
Is that the goods available for sale?
Is it the 560?
Well, the 560 are the goods that were sold.
Sale. Well, it has to be 440.
Where did the 600 come from?
The balance after the purchase,
Yeah, the balance after the second purchase or the first purchase?
the first purchase.
We ended up with 600. Is that the goods available for sale, the 600? Because out of the 600, how much did we sell?
560.
560.
And then we had 40 left. And then we
And then-
purchased 400 more units. So technically, how many goods, how much do we have available for sale?
Oh,
It was before. 600 from here and 400 purchases from here, which equals
1,000.
the same 1,000 as before. Remember that 1,000 in GAS? Remember, the key to remember in terms of goods available for sale is always based on what? Purchases plus any opening inventory. Did we have any opening inventory in this perpetual example?
Yes,
What was the opening inventory?
160.
In the perpetual? 160? So we had 160 first, and then we purchased 600?
No, we purchased 440.
And then add.
Where did this 600 come from?
Add the inventory and purchase
The 600 is the balance
of the inventory.
of the inventory and the purchase.
So we started with 160,
And we purchased 440.
and then we purchased 440.
Mhm.
Okay. So that's the total as a result of these two transactions. And then, what day did this was the opening inventory, April 1?
Mhm.
When did this occur?
April 6th.
When did this occur?
April 6th. Oh,
April 25th. So again, we right back to what we did on the periodic. GAS is available for sale is always in the opening inventory, if there are any, plus purchases for the month. We had one opening inventory of 160, we had two purchases. When we add them all up, we get 1,000, don't we? And that's our goods available for sale. Was using the formula, how do we calculate cost of goods sold? Nobody has the formula? Remember we said the formula for cost of goods sold is what? I had it up here. Goods available for sale over or minus? Divided by ending inventory?
The cost of goods sold,
We're trying to find cost of goods sold.
goods is available sale minus inventory.
Goods available for sale, you should write it down, minus ending inventory. That is an absolutely crucial thing, because questions always want you to come up with, determine goods, cost of goods sold. And the only way you can determine that, whether you use any of the methods, is to have that formula.
I said it again.
Say it again, Felony.
Goods available for sale minus any inventory.
So in our example, goods available for sale was how much? How much? 163 plus 440 plus 400 equals the same 1,000. That's what's interesting. Minus, what is the ending inventory on the perpetual? The dollar amount. That's the cost.
6,075.
1,075, which equals I'm waiting for somebody to interrupt me. Melanie? You see anything unusual about where we are at the moment? Should this be 1,000? No, this should be the value of 1,000, which is
12,700.
12,700. The same 12,700 from the beginning. Remember, the data does not change. So therefore, cost of goods sold equals 6,725. Is that anywhere in your text? Yes. If you haven't written that formula down for cost of goods sold, you should. Part of the question is always asking you determine cost of goods sold. And the easiest way to do it is to have that formula. Goods available for sale minus ending inventory. And the only way to get better at FIFO and life on these, they're not hard. You just have to do it again. And depending on who we are, again. All right. So that's your weighted average. The weighted average for perpetual stinks a little bit, doesn't it?
Yes.
Nowhere near that sweet weighted average we had for what? Periodic. Yeah, it stinks. What about the FIFO method? Is that straightforward now, or does that stink?
Thanks.
That stings too? We haven't looked at it yet. Crystal didn't even look, she did like this. She looked the other way like this. That stings too. I mean, she isn't even looking at it. Shadell. She's snoring in the other room. Shadell. Shadell didn't think I'd call at this hour of the night, the bitching hour.
Only 3 of us left.
What the hell? Where did Shadell go? Shadell.
But exam.
Which three persons are left? Venique, are you there?
Yeah.
Who's there with you?
Victoria and Tasia.
Taisha showed up?
Yes.
Stop it. I need to mark Taisha present then. Taisha, are you there for real?
I will.
Okay. Why didn't you say something? When I called earlier, you hadn't come into the room yet.
He was talking majority of that time.
I was talking all the time.
That was you?
That was me.
Man, all of you guys sound alike on this bloody internet.
So you have me absent last week. I was here last week as well.
Let me check that. Taisha last week. It's my foot. You were here last week, Taisha?
Yes, I was.
Man, it's a good thing you said that. Okay. Updated. Thank you very much. All right, let's take a moment and look at FIFO. What's what's wrong with FIFO? Isn't that straightforward? Anyone? FIFO. Isn't FIFO straightforward? No. After all that crap we did, it's not straightforward yet?
Like I said, I didn't come prepared, so I would have to go over it.
Oh, no, definitely, even if you were prepared, you still have to go over it.
So I would have, I listened, but I'll have
Okay, okay, Felony, they're putting the burden on you again. Is there anything in FIFO like that's crazy, like complicated, like that we should be mixed up after all the discussion about ending inventory and all that? Well, what's the first thing in FIFO? And I mean, in your checks, what's the first thing they tell you? Yeah. I mean, it's right, sorry, it's right there. April, what's the date?
One different, though.
Sorry?
This one different
This
Um,
one's different. This
than
one's good.
the one we read. Because the periodic inventory system had the, I think it was the latest price, I think,
Yeah,
right?
yeah. So what is this starting with? What is perpetual starting with?
This one is
April
starting
1st?
April
Yeah, the
1st.
first.
Okay, let's go there. Let's not complicate it, like reading the middle, the center, the back, and all at the same time. Let's go to the top. On April 1, what happened? April 1, what happened?
Inventory 160
Okay, opening inventory, same as before. 160
at $10,
at $10. All of this is known equals.
1,600.
So what's the problem with that?
That's okay, that part is okay.
Oh, that part is okay. Okay, what's the next transaction?
April 6th,
Next,
purchase
purchase
440
440
at 1250
at 1250,
equals 5,500.
5,500. Okay. And then April what?
10.
10. Okay. Sale 160.
At $10.
You mean this
Mm-hmm.
equals 1,600.
Negative 1,600.
Negative.
I guess, yeah. Because we sell it.
Does the book say negative or just 1,600? Okay, negative. And then what happened? Same day.
Mhm.
Sale 400.
At 1250.
1250 equals
Negative 5,000.
5,000. Okay. What's next? So how many units were actually sold? 560, just as before. At what cost? I mean, what amount?
6,600.
Okay. Sorry? Bracket. So what's complicated about this so far? Are we done?
No,
What follows that?
the balance.
What balance? Okay, April 10. 560 from what? You mean this total here? What is that total? 600. So 560 from 600 equals?
40.
Okay, at
1250.
1250. FIFO, remember, most recent? Equals?
500.
Are we done?
No, we made a purchase on the 25th.
25th, that purchase again? Purchase for how much? How many units?
400.
$14. Yeah, $14. equals 5,600. Now it becomes easy. Are we done? What do we do next?
Ending inventory.
Ending inventory. Piece of cake now. Is those two 440 at 5,006 plus 500 equals?
6,100.
Man. Seems easier. The only difference is you'll find is under perpetual, we deal with the transactions as they occur. Remember, under periodic, at the end of the year, you make the assumptions. Under perpetual, you actually deal with the transactions as they occur. That's all. And at the end of the day, you get the same end result. Okay. The homework question I'm going to give you is going to take you back into it, and I encourage you to try and do the question. I'm going to give you one question, I think it is, so that you can try and do it as quickly as possible after tonight, while some of this stuff is still fresh in your mind. Don't wait until the weekend while you slept like 5 times already for the week. Then sit down and try and figure it out. Okay? Go to page 294. Everybody go to page 294. Problem P2. Requirement 1, 2, and 3. Yes, that's just one question. Now, Vincent, I want you to read the introduction to that problem. What is that problem? Sorry, I want you to read requirements 1, 2, and 3. What are they asking you to do?
Compute the cost of the added inventory of wood form part on April 30th and May 31st using the average cost method. In addition, to determine cost of goods sold for April and May, round unit cost in an error set.
So the first one is average cost. Read requirement 2.
Compute the cost of the added inventory April 30th and May 31st using the FIFO methods. In addition, to determine the cost of the goods sold for April and May.
And then requirement 3.
Compute the cost of the ending inventory on April 30th and May 31st using the LIFO methods. In addition, to determine the cost of the sold for the cost of goods sold for April and May.
Which of the methods are you using? Perpetual or periodic? How do you know? Oh, it's Clarison, you mean? Okay. She said, oh, thank God. The other students hate perpetual too, even though it's not that difficult, it's just unusual. Okay, so go ahead and attempt that question. Again, try to do it as closer to tonight as possible. Don't sleep too many nights before you attempt it. And then when we come back, we'll finish the retail and gross profit method. Please read the rest of the chapter. Just those 2 methods we're going to talk about, and then we're going to move on. Okay, those 2 methods of valuation are very simple, nothing like the pain and suffering of LIFO, FIFO, perpetual, and periodic. Okay, remember, if you get stuck, you know where to find me. Do not be stuck. No, send me an email, send me a text or something, raise the question wherever you're stuck so we can resolve it and you can move on towards completing your assignment. Okay. All right. Does anybody else have any assignments outstanding for me up to chapter 6? I know you do. Yeah, that's fine. All right. If you have anything left, please send them to me as quickly as you can so you can get all the credit you're entitled to. Remember, down the stretch, it's like running the 880. The world is coming in, then you're breathing hard. You wish something would shoot you dead, but you cannot give in. Okay? Every point count. Sorry? Oh, you weren't here. So you missed my apology, which means I have to apologize again. Crystal, I know. Oh my God. Crystal is just like my wife, man. Stuff like that. She's like, but you said. I said, I know, but the world was coming to and I was fighting demons. She said, I know, but you said. She don't care about the demons and the problems. All right. Hopefully in another 24 hours or so, Crystal, you should see something roll into your mail. What did I say about the bad grade things, students? Don't let the midterm determine your future. Okay, that's like letting somebody come up to you and say, in my opinion, you're ugly. And then this, you're like, oh, you stop eating, you shrink right down to nothing, jump off the flicking bridge. For what? See my point? No, no, midterm, no. Just keep moving. Sorry. Hello, ladies, are you still there?
Yes,
All right, so did you get the homework question?
yes.
Wonderful. Remember, you guys know how to reach me. If you get stuck, send me a text or an email so you can be unstuck and finish your homework, okay?
Okay.
All right, see you guys next week, Monday. I'll be getting your grades to you very soon. And then we can all move on. Good night. Take care.
Good night.
Good night. Good night.